everybody, it's Pete Carmasino here at Chaikin Analytics. I'm your chief market strategist, and you're joining us today on the halftime show brought to you by StockCharts TV. So thanks for joining and tuning in week to week. We haven't done one in a few weeks. We've had some vacation time and some time away from the market, and the market is not taking a vacation. It is continuing a bit of a downside slide. That's hard to say today. And, we're just looking at different factors of what's going on. I mean, obviously the Fed is a big factor. Obviously, we've got earnings season coming up. And there's just a lot going on, right? We've been talking about the variant, and the virus, and the vaccine. There's an OSHA mandate that could be challenged and even shot down by the Supreme Court today. I'm not sure if we're going to get any data on that or not, but that's going to be a factor as well. So a lot going on. I'm going to look at one sector specifically, but I'm going to do another negative scan of 50-day crossover, crossing under the 200-day using StockCharts scanning and screening capability. And then I'm going to look at our charts, compare the two. And I found about 3 or 4 names that came up on that particular screen that I thought were interesting or potentially troublesome from that standpoint. And then I have some other names that we use on our own screener that have popped up, another 6 names. So in that screen, we found one bond ETF and one of the Russell, I think it's the Russell 2000, also being kind of changing trend a little bit. Now, we're going to look at trends from a different perspective today. We're going to look at that 50 going underneath the 200, but we're also going to look at our charts here, the relative strength charts here on Chaikin Analytics, and kind of compare the two. So we don't have too much time. It's typically a 15-minute segment, and we're going to try to get through everything today. But, as we start, we're looking at the Dow, the S&P, the Russell, the NASDAQ, all down over 1%. Looks like the NASDAQ's the worst of it, about 1.7, 1.8%. Make it almost 2% right now that I'm looking at the QQQ level anyway. So, look, we're getting this pullback. That's seasonal. If you look at any kind of seasonality chart in January, from a line chart perspective, you can see that pullback starts right around this time. It looks like it started a little bit early, but, maybe the Fed minutes kind of, fueled that fire and that seasonality to start a little early this year. And again, the seasonality chart and the guides, they're not exact. They're sort of guidelines, and look at them as guardrails. And you kind of see where we kind of head into January. We kind of close down, the bounce in February, and then a further lag into March. And that doesn't mean it's going to happen. It just typically does, right? So that's why we call it seasonality. And we want to take a look at it, right? It gets cold in winter and hot in summer. Typically does, right? And that's kind of how the market does work, because it's based off of behavior, from the individual participants. So let's dive into the charts, see where that takes us, and let's start taking a look at some of these names. Okay, everybody, we're back here at the technical scan workbench on StockCharts. And if you're obviously seeing this video, hopefully you're a subscriber to StockCharts. And we talk about this a lot. We look at obviously all of the tools that are available here, and plus, you add our power gauge, which is available on the ACP platform by just basically, purchasing that power gauge, clicking on our little icon here, and boom, there comes up the ratings come up for the stocks that we're going to be looking at. Now, a couple of ETFs in here aren't rated, but we'll look at our system so you can see the rating, and kind of take a look at how we look at that. So the scan that I did today was a bearish 50. 200-day crossover, the moving average crossovers. A lot came up, right? A lot of names I'm not going to look at, some mutual funds, a clean tech ETF, things like that. I'm just going to pull out the ones that I thought looked interesting, like Best Buy and the other names. But you can duplicate this screen on your workbench if you want to take a snapshot. That's kind of how I did it. I didn't get too fancy here. A lot of this is predefined, right? And I used some of these factors down here, but very cool, very easy, and very fast way to kind of just take a look and see if there's anything out there that's, getting ugly that you may want to be alerted to avoid, or even protect if you happen to be exposed to some of these names. So we'll look at the first one, Alexander's. It's a REIT. Now, REITs typically do well. We can get into really what this company does specifically, but we just don't have that kind of time. But there's that 50 and 200 day kind of crossing over. You're looking at MACD, definitely trying to break above the zero line. It did actually. but it's kind of a lower high, and RSI kind of failing and rolling over too. So you've got multiple things that are kind of shouting out a negative here, and the stock was unable to make a new high as well. And even if I go to our system here look at ALX real quick, see how we look at it, right? So we're neutral on the name. We definitely have a negative relative strength here, which is unusual. The REITs have been doing well, on this particular one. I don't know exactly this company by off the top of my head, but Real Estate Investment Trust, which says 7 properties in the greater New York City metropolitan area. Now, I don't know what those properties are specifically, but we know that particular area, New York City in general, has had some difficulty reopening, and a lot of different mandates and things like that. So this could just be a bit of a headwind here. The weird part is it's a strong trend and strong trend and a strong industry, but we just don't have a good ratings. And that means that there might be other fish in this pond you want to look at, but not specifically this one. But you're getting that crossover that was notified to us on the scanning situation here from ACP. The 50 going under the 200, typically not good, but it looks like it's done it before. So it's not a great one to be trying to take action on, but if you own it, it's maybe one you want to be aware of, just so you're aware. Things are starting to get negative now. Look, Best Buy's has its trouble that's been happening really since November, and right in the middle of the holiday season, which is kind of interesting. Look, there's been shortages, we know all about that, so maybe there's some less retail activity in the consumer electronics area, but this really kind of pushed in to a low here of 94.5, coming off of a high print of a 141. It's a pretty rapid decline. Obviously, this has changed trend, and RSI is really kind of failing as well. And so it's not a great looking chart. When if we go to look at our chart here, BBY for Best Buy, great store, always a great kind of a fun place to visit. I always like going in there. It's dangerous though. You get a lot of things that you weren't looking to buy, and you start buying. I think that's kind of the appeal for them as well. But this stock's been in a negative relative strength for quite some time. Had a glimmer of hope here, but that's what the beauty of the way our rating works is when this starts to break down, and that's a big gap down. I don't think anybody was prepared for that earnings release coming out, even though they beat. They were talking about guidance likely is what pushed this name down. But that's the way our rating works, because it was downgraded right to a neutral plus. And what that means is, and we can go back at ACP, and you see what's happening. Look, financials, earnings, everything looks good, but the technical picture is really what's keeping this below being bullish. So it's neutral plus, and that means that's a bullish name fundamentally, but it's below its long-term trend. Let's look at Kimball Electronics, symbol KE. Again, another neutral plus. So we already know what that means. It's a bullish name that's below its long-term trend, but you're getting that, you're just getting this particular name breaking down. I'm going to add this 200 back in here. Thought I saved it correctly, but I was moving fast today. But there you go. You can see that's starting to break down. That's a big gap. The stock's been moving. It's not, certainly doesn't sit around and wait for things stagnantly. It does move and does catch trends here, but this looks like it's having trouble getting above the 200, which becomes resistance. MACD is kind of signaling that, and so is the RSI. And if we go to our charts real quick, KE. It's kind of sideways action, really. It's down 1%, but that's kind of in line, trailing the markets all being negative today. But this is really one of those setups that we see a lot, even though this is a bullish name. So sometimes good stocks go down, right? This is a good example of that. It's a stock that actually is in a weak trend, but it's also in a weak industry. But fundamentally, it's sound. This is kind of that value trap that people get caught up in and saying, well, this name's doing this, this name's doing that, it's got a low PE, and blah, 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 right? The point being is that if the market is the headwind, if the relative strength to the S&P is your headwind, it's hard to fight. So don't do it, right? Try not to. If you're in it, you may want to protect it. I don't know where you own it. Obviously, we're just looking at the charts as of today, but the trend looks to be continuing. It hits the top of this trend, didn't even get to our long-term trend, and it's starting to reverse down. But if you go back and look here, we got that signal coming right in front of us here. So we'll look at BND. This is a bond ETF, which obviously when rates are rising like they are, has a negative effect on any bond, and specifically bond funds. And so we've been kind of calling that out to our members for weeks now about how when things start to ratchet higher, and that's what's happening, right? The talk of the town, and really what's been going on in markets for the last several weeks, running on a month now, since the Fed announced back in December what their intentions were, right? And so you see treasuries were weaker, right? And we're talking about 10-year yields right around 1.8%. Okay. So that means if bonds are rolling over, yields go higher. That's how that works. They're inversely related. But look at this name. I mean, this has been negative relative strength again against the SPY. It's hard to kind of measure that, but you can see this trend has just been slowly degrading over time. Money flow is getting negative, and just things, we're actually bearish. We actually turned bearish on the name this week. So it's kind of coinciding with what we're seeing. The last one is the Russell 2000. We can look at the chart real quick. Again, I got to change this to 200. I didn't save the layout properly. My apologies. I was running too fast today. But there you go. That's an interesting. That's kind of interesting. Now, this has been stagnant, right? It's been sideways for a long time and in a range. And it looks like we kind of just broke that range, right? Not a great looking chart. Maybe it's approaching oversold, right? And that could just be testing some support here. Not here to make that prediction. I wish I could. I just, predictions are hard, especially about the future. And I'll quote Yogi Berra right there. So, you look at this name, again, we turned bearish on it. The relative strength's negative. We were overbought here right around that middle band, and it kind of rolled over too. So the other names I want to look at that came up on our screener that are changing relative strength are these names here, these 6 names, and we'll go through them really quickly. But you're seeing these names, again, weak stocks that are having weak trends and weak industries. And even though they're coming off their highs, now these are just fresh, right? These are quick, new, fresh relative strength changes and a downgrade. So a couple of negatives, even though money flow has been super strong, you can see it here. It is weakening, and it tends not to get very weak for very long, at least in this last stretch, but it can, right? There's nothing that's saying it can't. So Datadog and Zscaler are kind of in the same business there, right? They provide monitoring and analytics platform for platform developers and information tech, blah, blah, blah. If you look at Zscaler, it's almost kind of the same chart. Let's take a look at that real quick. Very, very similar, fresh relative strength change and a negative rating as well. So these names I'm just calling out that, hey, they're changing on our system. I thought I'd bring them to light. Let's take a look at Equifax. Look, when rates rise, there's less bond activity, less loan activity. And so, we know what Equifax does, right? These are the credit score monitoring. They do a lot of other things too. There's some data that they can sell as far as consumer behavior and things of that nature. But primarily, the professional services industry is in a weak trend, and it's breaking down now. Big topping formation here, coming off a really strong relative strength change, on the positive side. But with this new change here, I'm just calling it out as an alert. These other names I don't really know. We know Domino's Pizza. That's a household name. That's down over 3.5% today. I don't know what the news is there, but we could potentially want to take a look under the hood here. But again, we got a weak stock and a weak industry, and selling off here with a fresh relative strength. These are the names I just wanted to call out today. They are changing trend. Okay, everybody. I hope you enjoyed this session of the halftime show here on StockCharts TV. Again, I'm Pete Carmasino with Chaikin Analytics, and we just wanted to kind of go over some names that we're kind of breaking down here. So it's hard to see through a lot of the stuff that's happening here in the markets, but you do have to pay attention to individual names if you're exposed to them. If you're not, take a look at those trends and wait for them to kind of validate on the upside before gaining any extra exposure. But if you have exposure to some of these names or other names in the industries that these names are in, start taking a look and start looking at those charts and get the power gauge so you can see what the rating is on a fundamental basis as well. We'll talk to you real soon. See you next week. Take care, everybody. Thanks.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.